Don'ts of tax day, with some confusion over how the president's new tax reform is actually affecting returns this year and people's taxes.
Failing to pay, can put you in a devastating financial hole. Our Pete Servakis joins us live now with more on what he's been able to find out. Hey, Pete.
Well, Susan Vince, a local CPA, says this is the most confusing time for taxpayers since the 1986 tax reforms kicked in. That was the last time, of course, that Washington made sweeping changes to tax policy.
The Republican-passed Tax Cuts and Jobs Act changed withholding tables for 2018, so most took home more money from each paycheck. But now that means smaller refunds.
When it comes time to filing, people, they don't remember. They only see that the refund isn't as big as last year.
That's one reason why Barry Sittel expects many taxpayers to apply for the IRS's 6-month extension and not file by April 15th.
There will be more extensions this year.
Bankrate reports 21% of Americans owe money to the government this tax season, up from 18% last year.
What's the worst thing you could possibly do? I mean, what creates a bigger hole for you?
Well, not filing at all. I mean, not filing an extension.
Sittel says if you're struggling to pay, do your best to cough up as much as possible of what you owe, ASAP, even if you file for an extension. That will minimize interest rates, which combined with late fees could be up to 25% of what you owe.
It's a lot like credit card debt, where if you don't pay it off, you start getting interest, and if you're only making the minimum payment, you're never going to get out of the hole. It's just gonna eat up your life savings.
And Sittel says state interest rates, which can be as high as 9%, are actually steeper, Vince and Susan, than what you pay if you missed your federal deadline.
So just cross your fingers, right?
Yeah.
Hope for the